Investing as a whole has always been the most effective manner to earn and make more money while making your own choice. However, in recent years, it's quite confusing where to invest, either the stock market or to consider buying cryptocurrencies. Hey there! Welcome back to another exciting video on this channel. In today's video, we're going to be talking about investing in the stock market and cryptocurrencies. Please understand that the video does not mean to impose any restrictions. You always need to do your own diligent research before making any investment decisions. On that note, let's begin. Warren Buffett said you should make sure to realize a way to make money while you sleep, or else you will die working hard. As much true as that phrase is, it is as difficult to find that sort of medium to invest in. Now that we have a lot of options to invest in, everything depends on your goals, objective, investment type, maturity period that you are expecting, and your interest area. The stock market has been there with us for ages, and we know that investing in the stock market will eventually give returns if the investment made is in consonance with adequate research. However, for cryptocurrencies, the same does not apply. Only after Bitcoin, which stepped in after the 2000s, did blockchain technology start to develop. It is currently at a developing stage and not reachable to most of the globe. Cryptocurrencies are the new thing. The concept of investing is similar to stocks. However, the regulation and operative parts are quite different. Unlike stocks, there isn't any authority at both in-state or international levels to regulate the cryptocurrency market. The major player in the market is the big whales. The entire concept of the inception of cryptocurrencies is a decentralized network, which means there will not be any authority that will regulate the crypto flow. For instance, the flow of the US dollar is regulated by the federal government, and the securities or stock market is regulated by the Securities and Exchange Commission. Whereas for cryptocurrencies, there isn't any authority that discharges the supply of cryptos in the market or any legal authority that regulates the process or any of it. Cryptocurrencies are the result of innovation and evolution in the history of investing. This is one of the trends that is making its very own chain in the future market. After the entry of blockchain technology and the worldwide adoption of cryptocurrencies, the next trend is the NFT market. A slight difference in investing, but the technology and money-making motive remain the same. Cryptocurrencies are the latest of these crazy trends, but one really seems to have taken the right flight. Even before cryptos, the bubble market of .com did not turn out to be fruitful for the market. Within a span of a few months, billions of dollars were lost, and the entire global economy went into a massive recession. However, for cryptos, indeed in the start, massive instability occurred due to people's own psychological reasons for not trusting. But that did not stop the market from exploding. With Bitcoin and Ethereum jumping in value, millions of investors tried to make profits with the rise of digital platforms. And yes, they were right. The digital platform is the new platform. Even stocks and commodities are being traded digitally. And once the economy has entered into it, there's no looking back. Therefore, if you are someone who has from the start investing in cryptocurrencies, you must know that the market is as high as it is low. Cryptocurrencies are a volatile market. That's because there's a lot of room for more people to come in. Bitcoin, as of today, is trading at $35,955, but that's nothing. Bitcoin's highest trading price was traced to over $60,000. But even that's low, given the market's capacity compared to the stock market. For Bitcoin to become stable in its price, it can reach as high as $100,000, or it might be a little over that. So, you see, the market has not yet entered into cryptocurrencies. Nowadays, the crypto market is mostly seasonal. When we will see more people entering, its volatility will increase. Right investment will likely make you a millionaire. Due to cryptocurrency's momentousness, a lot of people have stopped investing in traditional stocks. Is that step wise? Let's roll over what stocks are, step by step. Stocks are dramatically different investment assets than cryptocurrencies. Though both are generally liquid assets that belong on the speculative side of your portfolio, the similarities have no path anymore. Stocks are equities or ownerships of a public company, a type of security that you can purchase in order to gain ownership of the company. With the number of stocks that you purchase, you'll be allotted your share of stock. Given the volume and type of stock, you can literally even acquire a seat on the board of directors of the company. There are two major types of stock: common stock and preferred stock. Common stocks allow the owner to both receive dividends and vote during shareholder meetings. Preferred stocks allow the owner to receive dividends, but priority is given to common stockholders. Furthermore, stocks are subdivided into additional asset categories, such as growth stocks, value stocks, and income stocks. Stocks can also be shortlisted by the size of the company: large cap, mid cap, and small cap stocks. Theoretically, investing in stocks has been advantageous for historical and academic reasons on the grounds of building wealth over a long period of time. Over the years, millions of people have gotten wealthy by participating in stock market activities. The process of investing in stocks, unlike in history, is much easier nowadays. Some people invest directly in individual companies and purchase shares of those companies. Some investors make these purchases through a broker who charges an additional fee, but relieves you from the headache of going through compliances. Mutual funds are baskets of a lot of stocks together. Investors like to invest in mutual funds majorly for the high interest rates and the advantage of enjoying a pooled collection of assets. Ultimately, there are people who have made their lives lavish by investing in stocks via exchange-traded funds, a type of index fund. You can buy and sell ETFs throughout the day at their current market price. This differs from mutual funds, which are traded at the end of each. So, for stocks, you have these many kinds of options, which may not seem that varied once you have been into cryptocurrencies. The best part about investing in stocks is that you have guidelines. You know that there are these certain things, and likewise, you can calculate your estimated income and the time period you have been looking forward to. However, the same is not for cryptocurrencies. Hold on, because things are going to get a lot confusing if you skip the video. Make sure to watch till the end to understand where your money will be worth investing. Cryptocurrencies are digital currencies that people use to buy goods and services. El Salvador was the first country to have made Bitcoin a legal tender. So, cryptocurrency is a real thing for those who doubt it. The part where it says crypto is the term that refers to the fact that cryptography is used to secure the currency, protecting it from any kind of counterfeit or fraud. And that is the most important issue with regard to investing in cryptocurrency. Security is the most debated cryptocurrency problem investors face before entering the market. Even Bitcoin, the largest cryptocurrency, was a part of it. However, over the past few years, the technology and projects have developed to an extent to create a barrier for infringement. Cryptocurrency does not exist in physical form. Instead, it is stored electronically unless the owner is a service to turn it into a physical token. As stated previously, cryptocurrencies do not have any authority to look after. Projects release their own cryptocurrencies, and depending on the quality, work capability, and specification of the project or the token, the market, composed of the investors, is the one to either own it or throw it. There are thousands of cryptocurrencies in the market, but only a few are the ones recognized. Not every other cryptocurrency is getting adopted for commercial transactions. Therefore, as crypto investors, you need to make sure which cryptocurrency you will be looking into. When you're using cryptocurrency as a form of payment, you are typically using your phone or computer to exchange it online. Banks are not involved in any kind of crypto-related transactions. Exchange platforms based on blockchain technology are available in the market to help you with your crypto chores. After Bitcoin, Ethereum was the flagship cryptocurrency project based on whose blockchain technology. 80% of the cryptocurrency projects are being built. Ethereum was the first one to introduce smart contracts, and only after that were online transactions finally possible. In order to use an online platform to buy cryptocurrency, you will first be required to create an account. After purchase, the same will be stored in the digital wallet of that platform. Usually, MetaMask is used for such activities. However, Uniswap, PancakeSwap, and Robinhood are not quite far. Cryptocurrencies exist in more of a Wild West atmosphere. Unlike traditional currency, governments do not back the cryptocurrency, which is another reason why we see less participation in the digital market. This also makes the value of the market fluctuate dramatically, making it a more volatile investment than most stock purchases. The view will change certainly. Without a doubt, the time might take a bit longer. If you have been following cryptocurrency news after the SEC versus Ripple, the government will probably try to take hold in terms of governance of the cryptocurrency market, primarily to restore balance and to add checks and balances on illegal, fraudulent activities. Do you think if the government takes out any of such plans, will that violate the very inception of cryptocurrency? Or do you think governance will uplift the market? Leave your valuable comments up for further discussion. Let's jump on to the most interesting part. What are the benefits and demerits of investing in both the markets, starting with cryptocurrencies? Though cryptocurrencies are volatile assets, the amount of risk they undertake isn't a bad thing. The higher amount of risk will give you a higher yield. Compared in terms of yield, cryptocurrencies leads the way to stocks. Yes, there are chances that the coin's value can always swing in the other direction, leaving you with zero cash, but it can also make you a billionaire. The choice is yours. Secondly, starting up with cryptocurrencies is way easier than stocks. With platforms like Coinbase, a cash app, trading in the digital market is straightforward and more secure. Unlike stocks, cryptos provide a much wider option to choose from. Coins like Bitcoin, Ethereum, and Tether do dominate the market. But there are hundreds of amazing coins with super incredible specifications and values that can really change lives, both figuratively and literally. Of course, you need to be prompt and really good with your research skills, even if you don't have that. Only when you choose your ideal coin will you be able to make any difference, or else be ready to chuck all your money into the black hole. Since there are no regulatory bodies in the market, the place is also full of scams. Be assertive and 1000% sure about what you are investing in. Remember, there is no stoppage to your research. Lastly, the tremendous momentum. The EV giant Tesla has been adopting cryptos, investing with increasing haste. Big .com giants are making cryptos a payment option. The adoption market of cryptos is really large, so the momentum is incredible for cryptos. While there's certainly a need for caution when considering investing in cryptos, there's also plenty of room for optimism. Now, let's move on to the cons of cryptocurrency investment. Firstly, let's address the elephant in the room: cybersecurity risks. Though platforms like Coinbase are much secured, the risk of security has always haunted the platform. Therefore, even when you are selecting the token to trade in, you need to be careful about the project's security. Whether or not the project is secured, ask yourself, what is the blockchain? What is the security procedure? All these steps are important because if your money is hacked, it is practically impossible to retrieve it back. The second is the mirage of volatility. The volatility is the one making the platform more momentous. But don't forget, it can land you into serious trouble of cashlessness or bankruptcy. Since cryptocurrency is not backed by any physical asset, but traders want to own it, the huge price plummeting might cause novice investors to make emotional and impulsive decisions and end up with poor or no return. And lastly, is long-term investing really applicable for cryptos? The answer is debatable. Usually, while investing, investors are advised to look out for stronger assets or bonds with high yields so that you can keep the money and make wealth out of it. However, for cryptocurrencies, the scenario might be a little different. Coins are uncertain. If one coin is getting the media limelight today, the same coin will be forgotten the next day. Take Dogecoin, for example. The coin rose to 75 cents in its price, but it's been almost a year now. The coin has not made any returns, and people have forgotten about it. So, you need to be proactive when investing in cryptos. Short-term trading is something that is likely to give you a better yield than waiting for long-term results. Looking at the benefits of stocks, there are quite a lot. Much less volatility. This needs to take the first place. Stock exchanges have been around since 1611. This long history has successfully developed financial experts and billions of people to enter the market. While it's hard to predict the success of a single publicly traded company, index funds and other mutual funds, or ETFs, mitigate the risk of investing in groups of companies rather than a single one. The second point will be accessibility. Previously, registering for stock exchanges used to be a work of compliance. But now, with platforms like Acorn and Robinhood, fractional shares allow people to invest a small amount of money easily. the highly regulated part of the stock market has been keeping the stock market one step ahead of cryptocurrencies. People do not fear entering into the market because they will not have their shares hacked by some virus, and they know whom to address in case of any disputes, unlike cryptocurrencies, where there's nothing anyone can do. Lastly, the diversity in the market that is offered provides a higher sense of security and assurance. One can choose to invest in something they know well, maybe a coffee company or an electric company. Moving on to the defects of the stock market. Firstly, compared to the cryptocurrency market, the stock market might seem really slow. Risk in the stock market is much lower than in cryptocurrencies. Essentially, the thrill of potentially huge returns is negligible in stock. If you're looking forward to high-risk, high-reward assets, investing in mutual funds or bonds may not be what you're looking for. Apart from these two, there aren't many problems with the stock market. Intraday trading is one such option where you can earn and become a millionaire in a day, but that will require massive money inflow from your side. So, on the question of where to invest, the best strategy would be to invest in both. Everything depends on the likes of you and what kind of investment you are looking forward to. So, taking equal risks and knowing the market, why not divide your eggs into separate baskets? What are your views on that? Do let us know in the comments below. Make sure to like this video, subscribe to the channel, and turn on the bell notifications to never miss out on anyone. Make sure to like this video, subscribe to the channel, and turn on the bell notifications to never miss out on anyone.